Hello and welcome to Gotstockz. Today is Monday, March 24th, 2025. The stock market is on fire. Today, the S&P 500 is up over 100. The NASDAQ is up over 426. The Dow Jones Industrial Average is up over 597. So what we're going to focus on today is the S&P 500. We're going to look at some volume analysis and some technical analysis to see what are some good entry points to help minimize the risk, maximize the profits, to help build a perfect portfolio. I respect and appreciate your time, so let's just get right into it. We're currently looking at the SPY, which is the Spider's S&P 500 ETF Trust. This tracks the 500 stocks in the S&P 500. So we're going to use this ETF because we want to look at some volume analysis in this. Right now, what we want to pay attention to is this white line is the 10-day, the purple line is the 21-day, this green line is the 50-day, the orange line is the 100-day, the red line is the 200-day, and this teal color, this is the 300-day moving average. And the reason why this is important is because, as you can see, the market bounces off of the 300-day moving average and we're in a correction right now. What we want to focus in is it blew right through the 10-day and the 50-day, and it's pushed up into the 21-day and it sold off a little bit. Now we want to look at this volume that we have down here. The volume is significantly lighter from the day before, which was Friday, when we had a good day in the market. The market gaps down and it closes much higher. But look how the volume is starting to pick up. Now what we want to look at is this gap right here. Gaps need to get filled. When gaps don't get filled, look what happens. This gap that was established back here, this thing traded sideways and it eventually was filled right here a couple of months later. It's a good idea to pay attention to gaps when gaps happen, especially when indices move, and the S&P 500, the NASDAQ, and the Dow Jones Industrial Average gap up and they take off. Well, unfortunately, eventually those gaps will get filled. Sometimes it can be a week, a month, 2 months, 3 months. We don't know when that's going to happen, but it usually does happen. It happens time and time again. We can just look at the charts to look at the analysis to see. Depending on how big the gap is, will determine whether if it gets filled or not. Little tiny gaps in indices, sometimes they don't get filled. But when you take substantial gaps, they typically get filled. Now, when we take a look at the market here for the past year, this is a yearly chart. Each candle represents one day. What you want to take a look at is in a bull phase, the white line is the 10-day, is above the 21-day, which is above the 50-day, which is above the 100, which is above the 200, which is above the 300. The symmetry of the market is in an upward correction. Now we have these downdrafts that are going to happen from time to time, and that's exactly what we had here. This was more than a 10% correction. Now the question is this the end of our correction? Has the bottom been put in? Are we back in a bullish phase? What I would like to see happen is, let's zoom in. I would like to see this gap get filled immediately. The next few days, I would like to see it pull down, pull down, pull down, and fill this gap right to here. The entry point that we're going to be looking at is right here. If we take a look back in this range here, this peak was resistance, and then the market sells off, and then it went into a bull phase. But this is where we blew through that area, and then we blew through it this way. It needs to come settle down on 565.16 is going to be our entry point. Let's get a little more granular and look a little closer. If we look at this day back here where this was resistance, now is going to give us a support level that was established back in July 16th of 2024. Let's zoom in. Here's the peak. Here's the downdraft. We've pushed up. We have this gap and it gapped up. I would like to see for the SPY to settle back down and to pull back on lighter volume to 565.16. And we want to pay attention to this volume. The more due diligence and the more technical analysis that you perform on whatever you're analyzing, the better results you're going to get. Technical analysis is going to help you increase your percentages of possibilities, which will also increase your percentage of probability, which is going to help you with your profitability. That's what we're looking for. The more we put into this, the more we're going to get out of it. Thank you for tuning in. I hope this was helpful. God bless. Happy investing. And for more technical analysis on the stock market, please subscribe.